Welcome to the deep dive. This is where we take your sources, research, articles, notes, and really distill them down to the core insights, the surprising facts, the things you really need to know.
Hmm.
Our mission is always to cut through that complexity, give you those essential nuggets so you're properly informed.
Right.
And today, we're unpacking a company, Gryphon Digital Mining, that presents this, well, almost binary choice for investors.
Yeah, it's a fascinating situation.
Is it this distressed penny stock, teetering on collapse? Or is it maybe a backdoor entry into what could become a huge, politically connected Bitcoin mining giant in the
That's
U.S.?
the million-dollar question, isn't it?
Exactly. We're going to unpack why this isn't just a stock. It feels more like a high-stakes financial call option, all or nothing payoff.
That's a good way to put it.
Yeah.
Our focus today is squarely on Gryphon Digital Mining, ticker GRYP on NASDAQ. And what makes it so interesting, really, is that its whole identity is about to change because of this pending reverse merger with American Bitcoin Corp. So we're not just analyzing the company as it is now. We have to look at this corporate maneuver, this potential future entity, ABTC. It could completely redefine the investment.
Okay, so to make this manageable for you, we've split our deep dive into two parts.
Good idea.
Part 1 covers chapters 1 through 3. We'll get into the business understanding, then a critical management evaluation, and wrap up part 1 with a pretty stark financial analysis.
Okay.
Then, in part 2, we'll tackle chapters 4 through 7. That's market sentiment, the ownership structure, which is crucial here, a full risk assessment, and finally, our conclusion.
Sounds like a plan.
Before we dive in, just a quick reminder, if you're getting value from this, please do hit like and subscribe to the stockanalytics.ai YouTube channel. It genuinely helps us make more of these.
It really does.
And remember, members pay just €4.99 a month for priority deep dives. We're actually covering the entire S&P 500 over the next few months, and members get exclusive access. Want a one-off deep dive? Just send us a super thanks.
Great way to get specific stocks covered.
Okay, let's jump into Chapter 1, Business Understanding. The report kicks off with that core question. Is an investment in Gryphon Digital Mining a bet on a financially distressed penny stock, or is it a backdoor entry ticket into one of America's largest Bitcoin mining giants? That really is the unavoidable question here.
It absolutely frames everything because Gryphon trading around $1.38 on July 9th, 2025 is just fundamentally in transition. You simply have to look at both legacy Gryphon and this potential post-merger entity, American Bitcoin Corp, or EBTC.
So before this potential massive shift, what is Gryphon's core business right now?
Well, it's pretty straightforward on paper. They mine Bitcoin for block rewards.
But the numbers, they're not great, are they? A steep 40% drop in revenue year over year. Looking at the 12 months ending March 31st, 2025, Q1 revenue was just, what, $1.56 million?
Yeah, exactly. It's not just a dip. It signals, frankly, that the standalone business is struggling significantly.
Which explains the merger push.
It absolutely does. And this merger signals a huge strategic pivot. ABTC, the new company, plans to pursue industrial-scale Bitcoin mining. They're also talking about a strategic Bitcoin reserve.
And their goal.
Their stated goal is ambitious, to say the least.
Yeah.
Become the world's largest pure-play Bitcoin miner. That's quite a leap from where Gryphon is today.
What's also interesting is this diversification angle they've been exploring, AI hosting and high-performance computing, HPC.
Right, and the logic makes sense. If you have powerful data centers and, crucially, access to low-cost energy for mining, well, that same infrastructure is perfect for energy-hungry AI applications. It leverages the assets.
Okay.
So Gryphon's main service now is securing the Bitcoin network. They use about 9,660 specialized ASIC miners located in New York and Pennsylvania. But importantly, they did acquire an operation in Louisiana.
And the key there is the power cost.
Exactly. Ultra-low-cost power, around 1 cent per kilowatt hour.
Yeah.
That kind of cheap energy is a massive competitive advantage, especially after the halving event cut miner rewards. Energy cost is basically everything now.
But looking at their scale right now, Gryphon is, well, tiny. A $95 million market cap, ranked way down globally.
A very small fish, as the report puts it. That's the reality today. But then you connect it to ABTC's ambition, backed by Hut 8, Eric Trump mentioned, aiming to be the world's largest. That aspirational story is clearly what's driving the stock price.
Gryphon also talks about its ESG-focused net carbon neutral, sustainable energy. How much does that really factor into their value proposition?
It sounds good and maybe helps grease the wheels for deals, but
Hmm.
in reality, Gryphon's most tangible, most valuable asset right now is probably just its NASDAQ listing.
The listing itself.
Yeah, it's the vehicle for American Bitcoin's reverse merger. It lets them bypass a traditional IPO. So for American Bitcoin, Gryphon is essentially the public shell. The ESG focus is nice, but the listing is the core transactional value here.
Okay, let's zoom out to the industry. We had the halving in April 2024, cutting rewards. What does that mean for miners?
It means efficiency and cheap power went from being important to being absolute survival requirements. You have to run lean.
And that ties into the AI and HPC diversification.
Exactly. It's a major trend. Miners are rebranding as digital infrastructure providers. Despite the challenges, the overall crypto mining market is actually forecast to grow pretty substantially from around $2.4 billion in 2025 to maybe $4.4 billion by 2032. That's driven by institutional money coming in, Bitcoin ETFs, things like that.
But the competition,
Yes,
it's
yeah.
brutal, right? You've got giants like Core Scientific, Hut 8, Riot, CleanSpark.
Oh, yeah. The U.S. leads the world in Bitcoin mining hash rate over 36%.
Mm-hmm.
So it's incredible competitive here. Gryphon, as it stands, is a minnow compared to those guys. A very small player.
What about the regulatory side? Has that helped or hurt?
Lately, especially in 2025 under the Trump administration, it's become markedly more favorable. You had the SEC clarifying that proof-of-work mining, like Bitcoins, isn't generally a security. That was huge.
A big relief, I imagine.
Definitely. And the White House is even exploring a strategic Bitcoin reserve. Now, state rules can still vary, and federal AML-CFT rules obviously apply, but the overall federal tone shifted.
So if regulations are friendlier, why is it still so tough to get into this business? What are the barriers?
They're significant. First, just massive capital needed for the ASICs, the buildings, the infrastructure.
Mm-hmm.
Second, maybe the biggest hurdle is getting that ultra-low-cost power, ideally under 5 cents per kilowatt.
Okay.
Then you've got the tech constantly becoming obsolete. You have to keep upgrading. And finally, economies of scale.
Yeah.
The big guys just operate much more efficiently.
So given all that, does Gryphon actually have a competitive advantage, a moat?
Very few traditional moats. Their brand is unknown, hence the planned name change to ABTC. That Louisiana power operation is great, but it's too small, just 2.9 megawatts, to really move the needle for the whole company.
So the moat is...
In the context of this merger, it really comes back to the NASDAQ listing. That's its unique, valuable asset for this specific deal.
Okay, so let's synthesize Chapter 1, business understanding. It seems pretty clear Gryphon's standalone business was failing, or at least struggling badly. The merger is really its only path forward.
Absolutely. And it reflects a bigger shift in the industry, too. Miners have to become more than just miners. They're becoming specialized energy and computing infrastructure providers. They have to leverage those core assets, cheap power, data centers, for things beyond just Bitcoin.
Right. Okay, that sets the stage perfectly. Let's pivot now to Chapter 2, management evaluation. Who's steering the ship, especially through these choppy waters?
Well, the current team seems almost purpose-built for a crisis situation, frankly. The CEO, Steve Gutterman, came on board in September 2024. His background: 30 years in M&A. Not crypto operations, but deal-making. He's apparently led or co-led something like 92 M&A deals.
Wow, okay, so a deal guy.
Exactly. The CFO, Sim Salzman, does have direct crypto mining experience, though he was CFO at Marathon Digital, MARA.
So their focus seems laser sharp on just getting this deal done. Survival mode, orchestrating the debt restructuring with Anchorage, negotiating the merger.
That seems to be the mandate, and it's important to understand this specific team. They're largely expected to step aside after the merger closes. So the long-term bet isn't really on them. It's on the leadership of American Bitcoin, which is, untested in the public markets. For Gutterman and Salzman, success is defined by closing this deal and getting that 2% stake for current Gryphon shareholders. They're transaction specialists, closing the chapter.
Makes sense. What about transparency and ethics? Anything stand out?
They use standard communication methods, but there is a pretty significant red flag mentioned in their filings.
Oh, what's that?
They disclosed material weaknesses in internal controls over financial reporting.
That sounds serious.
It is. It means their processes for ensuring accurate financial numbers have significant gaps. This could potentially cause delays with regulators reviewing the merger or even force American Bitcoin to try and renegotiate terms. The accuracy of Gryphon's books is critical for the deal.
Right, you need to know what you're merging with. And capital allocation. Where's the money been going?
Almost entirely towards just surviving. There was that small $1.5 million acquisition of the Louisiana site, but that's really it for operational investment.
The big story is the debt restructuring and the merger setup, converting that $13 million in debt to equity. Massive dilution, but necessary for the deal.
Precisely. It wasn't about growth investment. It was pure capital preservation, giving existing shareholders something that 2% stake in a potentially viable ABTC instead of 100% of a company likely headed for bankruptcy.
And no dividends, obviously.
No, absolutely not. Appropriate for a company losing money.
They did announce a share buyback back in 2023, $5 million.
They did, but honestly, any effect from that was completely swamped by the huge subsequent dilution. It was negligible in the grand scheme of things.
And the bottom line metric, return on invested capital.
Yeah, that tells the story starkly. Gryphon's ROIC was negative 317.90%.
Minus 317%. So just destroying capital.
Essentially, yes, not creating values. Clear quantitative proof the standalone model just wasn't working.
Okay, that leads us directly into the hard numbers in Chapter 3, financial analysis. Let's start with the market cap again.
Still around $95.1 million. Firmly in microcap territory, which always means higher risk, potential volatility, maybe lower liquidity.
And those revenue trends we touched on, they really are concerning when you look closer. After some early growth, it stalled, then fell sharply. $21.9 million in 2023, down to $20.5 million in 2024, and then that steep 40% year-over-year drop in the latest trailing 12 months, it's contracting.
Yeah, significant contraction. And the profit margins for that same trailing 12-month period are just grim. Gross margin only 10.76%, operating margin negative 148%, net profit margin negative 108%.
Wow.
These aren't just unprofitable numbers. They indicate a business that's structurally unsustainable on its own.
And cash flow, are they generating any cash from operations?
Nope, the opposite. Consistently burning cash. Negative free cash flow of about $7.3 million for the trailing 12 months ending Q1 2025. They rely heavily on outside financing to keep the lights on.
Consistent losses too, right? Apart from that one anomaly in 2022.
It's exactly. 2022 showed $3.5 million net income, but that was mostly non-cash accounting stuff. Other years, big losses.
Yeah.
Negative $28.6 million in 2023, negative $21.3 million in 2024. Consistent unprofitability. But maybe the most alarming metric, drilling down into financial stability, is the debt-to-equity situation. Total debt around $5.5 million. Okay. But shareholder equity is negative $7.66 million.
Negative equity, so liabilities are greater than assets, technically insolvent on paper.
Precisely. It's a very precarious financial position.
And that's reflected in other ratios too.
Definitely. The current ratio, measuring short-term liquidity, is just 0.35. Anything below 1.0 is a red flag. 0.35 indicates a liquidity crisis. And the Altman Z-score,
That's the bankruptcy predictor.
yeah, it's at negative 17.63. A score that low strongly predicts bankruptcy for the standalone company.
So trying to value this company using standard metrics like PE is pointless.
Completely useless. You can't put a price-to-earnings multiple on negative earnings. It just doesn't work.
Which brings us to intrinsic valuation, like a DCF, discounted cash flow. Estimating future cash flows, discounting them back.
Right, but again, for standalone Gryphon, it's basically impossible. With negative cash flows projected, the DCF would give you a negative value. It's misleading.
So the only way to even attempt a valuation is to model the combined post-merger ABTC.
Exactly. And that is inherently speculative because ABTC doesn't exist yet as a public entity with a track record.
But the report did run an educational model, right? What kind of range did that suggest for ABTC?
Yeah, for educational purposes only, the model suggested a very wide potential enterprise value range for ABTC.
Yeah.
Maybe $2 billion to $5 billion.
Okay, a huge range. And applying the 2% stake for current GRYP shareholders.
That implies a value for Gryphon's current equity somewhere between $40 million and $100 million.
And here's the kicker, the paradox. Gryphon's current market cap is around $95 million.
Right. It's already pricing in the high end of that extremely speculative range for the future ABTC.
So Gryphon on its own, basically worthless from a fundamental standpoint.
Pretty much. Its entire current market value comes from the hope embedded in that 2% stake in this future, speculative, much larger entity.
Which really drives home that call option analogy. The current share price is like the premium you pay for the chance of a future payoff.
Exactly. It's a bet on the merger succeeding and ABTC becoming incredibly valuable.
Okay, we've unpacked the financials, the business struggles, this valuation paradox. Now let's explore how the market sees all this in Chapter 4. Market sentiment. What are the analysts saying, if any?
Well, coverage is thin, really just H.C. Wainwright, and they have a hold or neutral. Crucially, there are basically no current official price targets out there.
which signals extreme uncertainty.
Absolutely. Morningstar shows a massive implied range, like $0.86 up to $2.76, just highlighting how divided the views are on where this could go.
And the stock price itself has been jumping around based on merger news, like the S4 filing.
Oh, extremely sensitive. And the media coverage reflects that split, too. You see excitement about this potential new Bitcoin mining giant, but also a lot of caution about, catastrophic shareholder dilution and the huge execution risks.
And lawsuits.
Yeah, there's mention of class action lawsuits starting to pop up, investigating whether the merger terms are fair to the current Gryphon shareholders who are getting diluted so heavily.
What about short sellers? Are people betting against this?
There is some short interest, around 4.08%. That's meaningful. Likely folks betting on the weak standalone fundamentals.
But it's expensive to short.
Very. The cost to borrow shares is reported between 37% and 42% annually. It's extremely high, suggesting it's risky or difficult to maintain a short position.
And technically, despite the dire financials, the stock price is actually way above its moving averages.
Yeah, the price, around $1.38, is substantially above its 50-day, which is under $1, and its 200-day, which is also around or below $1.
So a huge disconnect. Fundamentals say distress, technicals look bullish.
Exactly. It's that profound disconnect. The market is clearly trading the story of the merger, the potential of ABTC, not the reality of Gryphon today. Classic story stock behavior.
Okay, fascinating disconnect. Let's move to Chapter 5, ownership structure. Who actually owns Gryphon now, and how dramatically will this merger change things?
Well, first off, institutional ownership is really low, somewhere between 5% and maybe 12%. And it's not your typical big mutual funds. It's more specialized players, like merchants and Ltd, often seen in distressed or special situations.
And the biggest holder is actually the former lender.
That's right. Anchorage Lending CA, LLC, holds about 21.3%. They converted their debt into equity. This really points to the whole situation being a kind of creditor-led workout. They took control to salvage something.
Makes sense. What about insiders?
Insiders, including management, hold a decent chunk, around 14.5% to 15%. But here's a potential red flag.
Okay.
Over the last 3 months reported, insider activity has been overwhelmingly bearish. Roughly 3.94 million shares sold and 0 shares purchased by insiders.
0 bought, almost 4 million sold. That's not a vote of confidence.
It's definitely a cautionary signal, you could say.
Yeah.
Now, ownership today is concentrated, but the merger triggers a massive radical shift.
How radical?
Think about it this way. All current GRYP shareholders, the public, insiders like management, institutions like Anchorage, they go from owning 100% of Gryphon now.
To owning just 2% of the new ABTC.
Exactly. And the former shareholders of the private American Bitcoin Corp get the other 98%. It's a near total ownership flip.
So let's spell that out again. If Gryphon's $95 million market cap represents just 2% of the new entity,
Then the market, right now, is implicitly speculatively valuing the entire combined ABTC enterprise at roughly $4.75 billion.
wow, $4.75 billion for a company that doesn't publicly exist yet.
Precisely. So when you buy GRYP today, you're buying that tiny 2% slice of a very large, very private, very speculative future venture.
Okay, we have all the pieces, the business, the management, the financials, market view, ownership shift. Let's put it all together in Chapter 6. Risk assessment, using a SWOT analysis, strengths, weaknesses, opportunities, threats. Let's start with strengths, internal ones. What does Gryphon actually have going for it?
Well, the list is short, frankly. Strength 1,
Yeah.
the NASDAQ listing. It's the crucial vehicle for this merger. Strength 2, demonstrated ability to secure that ultra-low-cost power like in Louisiana, even if it's small scale.
Right.
And strength 3, that experienced special situation management team focused on getting this deal across the line.
Okay, not a long list. Now, the weaknesses, internally. This list feels longer.
Much longer. Financial insolvency, negative equity, auditors going concern, doubts, operational unprofitability. That crazy high break-in cost per Bitcoin, over $75,000 in Q4 2024. Lack of scale compared to peers. That disclosed material weakness in internal controls. And of course, the massive 98% shareholder dilution baked into the merger. It's a litany of weaknesses.
So the weaknesses seem overwhelming. What about opportunities, external factors?
There's really one overarching opportunity, the merger itself. It's the lifeline. Beyond that, if the merger succeeds, ABTC will be positioned in growing markets, Bitcoin mining and AI HPC. And it could benefit from those potentially favorable U.S. regulatory tailwinds we discussed.
Okay, so the opportunity is almost entirely tied to the merger succeeding. Now, the threats, external factors, what could derail this?
Threat number 1, the biggest one. The merger fails. That's a binary risk, could wipe out most of the value. Beyond that, you have the inherent volatility of Bitcoin's price, intense competition getting even tougher, and the constant threat of technological obsolescence requiring huge capital spending.
Macro factors, too?
Sure, high interest rates make borrowing for expansion expensive and can reduce investor appetite for speculative plays like this. Inflation can squeeze margins by increasing operating costs.
And you mentioned something earlier that cuts against the favorable regulation tariffs.
Yes, that's a major, maybe underappreciated threat, U.S. trade policy. Even with a crypto-friendly administration, those proposed 2025 tariffs of 24-36% on hardware from China or Southeast Asia, that directly hits U.S. miners' bottom line.
It increases their capital expenditure costs significantly.
Exactly. Just when they need to be most cost-efficient, their equipment costs could jump. It's a structural headwind, even if other regulations are helpful.
So, synthesizing this SWOT, Gryphon's internal weaknesses are so profound they basically cancel out its standalone strengths.
I think that's fair.
Which means the entire investment thesis hangs on that one massive opportunity of the merger and is primarily threatened by the risk of that merger falling through. It really is a bet on a single high-stakes outcome.
Couldn't have said it better myself.
And that brings us finally to Chapter 7, Conclusion. Let's try to synthesize the bull case versus the bear case one last time.
Okay, the bull case is simple. It's all about the transformation through the merger with American Bitcoin Corp. It's a total reset. You're swapping 100% of a, let's be blunt, sinking ship for a 2% stake in a potentially huge, ambitious new venture.
And this new venture, ABTC, aims for massive scale, has big names associated with it like Hut 8 and the Trump family connection, could benefit from favorable regulations, and is tapping into both Bitcoin and AI/HPC growth. It's that leveraged option-like bet on future success.
That's the bull case in a nutshell. The bear case, however, stares the harsh realities in the face. Gryphon today is financially insolvent. It has a track record of destroying capital. Auditors doubt it can continue as a going concern.
Plus, the catastrophic 98% dilution for current shareholders, can't emphasize that enough.
Absolutely. Then you had the execution risks, just getting the merger done, regulatory hurdles, those internal control weaknesses causing problems, the lawsuits challenging the deal, and even if ABTC is born, it still faces huge challenges. Bitcoin volatility, fierce competition, and those margin-crushing hardware tariffs.
So to restate the valuation point one last time, valuing Gryphon itself is impossible, yields negative value. Its worth today is purely contingent on the speculative future of ABTC.
Right. That educational model gave a possible ABTC value of $2 or $5 billion, translating to maybe $40, $100 million for Gryphon's current equity via that 2% stake.
And the current market cap of around $95 million is already at the top end of that range. It fully embraces the speculative bull case, totally detached from Gryphon's standalone fundamentals.
Which brings us back to the core idea. Buying GRYP today is like buying a call option. The share price is the premium you pay for the possibility of ABTC succeeding wildly.
And whether that premium is cheap or expensive, well, that depends entirely on two huge unknowns.
Exactly. One, what's the actual probability of this merger closing successfully? And two, what will the real long-term value of this highly speculative ABTC venture turn out to be? Nobody knows for sure.
The risk of losing everything is very real if the merger fails.
Exceptionally high risk of total capital loss. So look, if you have a very, very high tolerance for risk and you truly believe in the vision American Bitcoin is selling, maybe it's an interesting, though incredibly speculative way in. But for any traditional value investor looking at fundamentals, this is uninvestable right now.
So what's the final takeaway here? Maybe it's less about Gryphon itself and more about how markets grapple with extreme uncertainty and the promise of radical transformation. It makes you ask, are you investing in a real company or just in the concept of what might be? And what price are you willing to pay for that dream?
A very pertinent question for anyone looking at this stock.
If you found this deep dive valuable, please do hit that like button and subscribe to the stockanalytics.ai YouTube channel. It really helps us out. And remember, members get priority deep dives for just $4.99 a month. We're covering the entire S&P 500 soon, exclusive access for members. Or drop a super thanks for a one-off request.
And please remember, this analysis was generated by an AI system. It's for educational purposes only and absolutely should not be taken as financial advice. Always do your own thorough research or consult with a qualified financial advisor before making any investment decisions.